Today, let's talk about why Google, or more accurately, its parent company Alphabet, is arguably the most undervalued tech giant in today's market. Despite dominating multiple sectors search, advertising, cloud, mobile, YouTube, and now AI its stock continues to trade at a discount compared to its peers. And that presents a rare opportunity for long term investors. Let's break this down using data and fundamentals, not hype or speculation. Alphabet delivered an outstanding set of numbers for the second quarter of 2025, reassuring investors and analysts alike that its core business remains strong, even as it undergoes an aggressive transformation into an AI first company. Total revenue came at 96.4 billion, which represents a 14% year-over-year increase and bet Wall Street expectations by 2.39 billion. In constant currency, the growth was 13%. This kind of growth is significant, especially for a company of Alphabet's size, and it underscores strong momentum across all segments: search, YouTube, cloud, and subscriptions. On the profitability front, net income rose by 19% to 28.2 billion, while diluted EPS or earnings per share came in at $2.31, up 22% year over year from $1.89. Again, this bet analysts EPS estimates by 11 cents, reflecting solid operational efficiency despite legal expenses and rising infrastructure costs. Operating income increased by 14% to 31.3 billion, maintaining a robust 32.4% operating margin, even with a one-time 1.4 billion legal charge. This shows Alphabet's ability to absorb short-term shocks without sacrificing margin performance. While operating cash flow stood at 27.7 billion, free cash flow declined to 5.3 billion US dollars due to heavy capital expenditure during the quarter, $22.4 billion to be exact. However, this CapEx spike is not a red flag, in my opinion. It reflects the company's aggressive investment in AI infrastructure and data centers, which are expected to drive future growth for the company. Every major metric bet expectations, and business segments that drove this performance, search, cloud, and YouTube, are not only growing, but doing so with rising margins. For investors, this quarter provided clear evidence that Alphabet's AI investments are not slowing down its core profit engine. In fact, they are accelerating its transformation. Despite growing concerns over AI-powered search alternatives like ChatGPT, Perplexity, or even Bing's integration with large language models, Google's Q2 2025 results showed zero signs of weakness in its core search business. In fact, the numbers tell a different story, one of continued growth and dominance. Revenue from Google Search and other related services rose 12% year over year, hitting 54.2 billion in Q2 alone. That's more than half of Alphabet's total revenue for the quarter. This means that despite all the noise around AI search, Google Search remains the single largest contributor to Alphabet's top line. And it's not just numbers, key engagement metrics also improved. Paid clicks were up 4% and cost per click rose 8%, showing that not only are users continuing to search, but advertisers are paying more to reach them. That's a clear sign of sustained demand and healthy monetization. A major driver behind this continued growth is Google's successful integration of AI into search itself. Features like AI overviews, which provide quick AI-generated summaries at the top of search results, are actually driving more user engagement, not less. According to the company, these overviews are now responsible for over 10% more search queries globally in categories where they are shown. Another innovation, AI Mode, has already reached over 100 million monthly active users in the US and in India. This further enhances Google's ability to deliver value-added interactive search results. These tools are not displacing Google Search, they are enhancing it. And let's not forget scale. Google still handles 13.7 billion search queries per day, compared to OpenAI's estimated 2.5 billion daily prompts. That's more than 5 times the query volume, and with over 5 billion global users, Google's distribution and data advantage is unmatched. The best part is Google has added all these AI features directly into its regular search page. That means people still see ads like before, and Google keeps making money from those ads without asking users to pay a subscription fee like some of its competitors do. So while AI driven search is evolving, it hasn't disrupted Google. In fact, Google is absorbing AI into its search architecture faster and at greater scale than anyone else. That's why search remains not just relevant but more profitable and more essential than ever to Alphabet's business. Even with rising competition from ChatGPT, Perplexity, and Microsoft's Bing, Google Search continues to dominate the global market. As of June 2025, Google still held a commanding 89.5% share of the global search engine market. That's only a slight decline from its 92.2% share back in late 2022 when AI search tools first started gaining traction. To put things in perspective, Bing's market share has barely moved, inching up from 3.4% to just under 4% over the last 3 years. And despite the rapid rise of AI chatbots, none of them have been able to replace Google as the go-to destination for everyday search queries. This continued dominance shows users trust Google's ability to combine traditional link-based results with modern AI overviews. And more importantly, Google's integration of Gemini into search has helped retain user engagement rather than lose it to third-party AI tools. The numbers show that most users aren't leaving Google. They are clicking more and spending more time on the platform. So instead of being disrupted by AI, Google is using AI to enhance search and monetize it better than ever. YouTube remains an essential pillar. Advertising revenue rose 13% to 9.8 billion US dollars, and YouTube Shorts, the company's answer to TikTok, now generates as much ad revenue per watch hour as traditional long form videos. With over 200 billion shorts views per day, YouTube isn't just maintaining its lead in online video, it's expanding it. And in the US, it's number one platform in total TV watch time, ahead of Netflix and Disney Plus. Meanwhile, subscriptions like YouTube Premium and YouTube Music are growing rapidly, contributing to 20% growth in the subscriptions and platform segment. Google Cloud is Alphabet's fastest growing and most undervalued asset. Revenues rose 32% year over year to 13.6 billion. Operating profit more than doubled to 2.8 billion and margins expanded to 20.7%. Google Cloud's backlog has reached 106 billion, up 38% year over year, an enormous number that reflects strong enterprise confidence. Notably, Google Cloud signed more billion-dollar plus deals in the first half of 2025 than in all of 2024. And the number of deals worth over 250 million US dollars has doubled year over year. Customers are choosing Google Cloud for its AI-ready infrastructure, integrated Gemini tools, and unique multi-cloud strategy. Its 32 billion acquisition of Wiz enhances its security offering and helps customers manage AWS and Azure accounts seamlessly, all through one Google-powered gateway. What sets Alphabet apart is its full-stack AI strategy. Unlike competitors that depend on external hardware like NVIDIA GPUs, Google designs its own tensor processing units, or the TPUs. These chips are optimized for AI workloads and help Google deliver superior performance at lower costs. Gemini, Google's family of foundational models, powers search, YouTube, ads, cloud, Android, Gmail, Docs, and more. The Gemini Deep Think model recently achieved gold medal performance in the International Math Olympiad, showing world-class reasoning skills. In short, Alphabet doesn't just use AI, it builds it from silicon to software. And user engagement is soaring. Gemini now powers over 980 trillion monthly token requests across Google's ecosystem. Its standalone app has over 450 million monthly active users, and that number keeps growing. Here's where Google has a massive lead: monetization. While competitors like OpenAI rely on a $20 per month subscription, Google monetizes AI through its ad business, which is already fully integrated with AI powered tools. Over 2 million advertisers now use Google's AI asset generation. Campaigns using AI Max saw 14% more conversions. Unlike OpenAI, Google has decades of experience running performance driven ad networks. It's already placing ads within AI overviews and testing them inside AI mode. With AI-driven search keeping users on Google's own page longer, Google captures 100% of ad revenue, not just the share it gets from the partner websites. This increases margins and improves advertiser ROI. Despite this strong performance, at the time of this video recording, Alphabet trades at a forward PE of just 19.6x, well below the S&P 500 average of 22.4x and far below peers like Meta at 27.7x forward PE, Apple 30x, and Microsoft 34x. If you exclude stock-based compensation, the adjusted PE drops to just 16x, making the stock look even cheaper compared to its future earnings potential. Its forward EV/EBITDA is only 12x, lower than its 10-year average. The PEG ratio stands at 1.31x, which is considered ideal by GARP investors. Most other Magnificent 7 stocks have PEGs well above 2. So in simple terms, Google is growing fast, but its stock isn't expensive relative to that growth. That's a sweet spot for long-term investors. One discounted cash flow model estimates Alphabet's intrinsic value at 407 per share, offering over 110% upside. The bottom line, Alphabet is priced like a company under siege. In reality, it's thriving and executing one of the most comprehensive AI transformations in tech. Alphabet isn't just reinvesting in growth, it's returning capital to shareholders too. In Q2 alone, it repurchased $13.3 billion in stock. It has $86.3 billion remaining in its buyback program. It raised its dividends by 5% to 21 cents per share, and it still holds 95 billion in cash. This is a business that generates immense cash, funds its own AI expansion, and still rewards shareholders generously. Yes, there are risks. Google is facing regulatory challenges. The CapEx is high. But these risks are well known, factored into the stock, and manageable given Google's size, free cash flow, and operational efficiency. CapEx is projected to hit $85 billion in 2025, largely directed at data centers, AI chips, and server infrastructure. These investments, in my opinion, will power future growth, not drain it. So my final thoughts on this. Is Alphabet the best bargain in big tech? So what do we have here? A company with best-in-class margins and cash flow. The firm that has dominant platforms across search, video, mobile, and cloud. A vertically integrated AI stack from chips to user interface. Google has a powerful monetized ad engine that adapts to AI instead of being threatened by it. And a company with a forward valuation well below its peers and its historical average. In short, Alphabet is misunderstood. The market is sleeping on a titan, and that's why Google remains undervalued and undeniably worth a closer look. Thanks for watching. Have a great day.